Okay, welcome to another WeKo Labs podcast. Today's guest is Adam Brown, who is the VP of Sales and Business Development at Propy.com. Propy is a tech company revolutionizing the real estate industry. Their technology allows real estate transactions to happen online and on smart contracts. Also joining us is a good friend of mine, Jason Triano, and the gentleman who's responsible for the introduction. He's a realtor at Compass and a Web3 NFT crypto enthusiast. So thank you guys for being on the podcast. And I'm really excited about this one.
Great.
Likewise.
Excited too.
Adam, anything that I left out, any gaps that you want to fill in? Because I'm sure I didn't do enough justice to the intro, but I just wanted to give the people just some idea of who you are, who Propy is, for anyone who may not have heard of it or be familiar with it at this point.
Yeah, we're a relatively new startup, so there's a lot of people who haven't heard of us, but they've heard of NFTs and crypto and blockchain. So we're excited to kind of bring real estate, tech forward. So we're excited about that, and we're excited to be here.
So reason I was really interested in having you on is I'm just going to give you a quick backstory as to kind of how we got here. So I've been a loan officer for the past 15 years, mortgage banker, left the business. I don't even know how long it's been now, 10 years ago, started a fitness company with my best friend, Paul WINTERGERST, who's on this call. After, raising some capital, launching our first location, we decided to kind of split ways, and I got back into the mortgage business. And when I did that, I kind of had to reinvent myself. So fast forward, I started putting out content specific for people looking to buy a home. That ended up leading to organically me starting a marketing company where I'm very niche. I have loan officers and realtors. And I would say back in November, Paul, we joined my brother Anthony, who was pretty far ahead of us in the NFT game. He had turned 300,000 into 5 million, investing in some of the biggest projects. He's a hedge fund manager, lives in Puerto Rico. And we thought it would be fun for like a group of us to kind of get together, put in some money, and start getting involved in this space. In January, we raised $1 million, and then the market kind of took a dive. But we are in the process now of becoming our own fund, raising capital, and getting people to kind of invest more in this space. And the reason I wanted to be on this call was I think I'm a really good candidate to kind of bridge the gap between real estate agents, right, or real estate professionals and this new technology. But I don't know enough about it, the benefits, the pros and cons to people getting involved, which is really why I wanted to have you on today to kind of just explain to us what you guys are doing and how realtors specifically can start getting involved in this space and the benefits of doing so.
No, that makes sense. It makes total sense. Part of your intro makes me laugh. Is it true that if you ever get into the health and fitness space, at that point you can never gain any weight because then you lose all credibility? Is it like a realtor who lives in a bad house? Like I would never get into that vertical because I love dessert too much. I couldn't do it.
That's actually a great question, but really here's how it started. So Paul has been an athlete in shape his entire life. I have been a fat Italian and never really took care of myself, right? I didn't have that structure because I wasn't part of sports and whatnot. And I basically went to him and I was like, hey, can you just help me, get started? This was years ago. Just tell me some things that you're doing, eating, some workouts, etc. And we ended up running into a friend of ours that was all jacked up. He was ripped. And we're like, what are you doing? We haven't seen you in so long. And he explained to us he was in the infomercial for Insanity. Do you remember that?
Oh,
Sean
yeah.
T?
Yeah.
And he explained to us what that entailed. And he was going down to Rockefeller Center once a day, working out in the gymnasium with 100 people, auditioning to be in this infomercial. Sean T was the trainer. They had 5 meals prepped and waiting for them every time they showed up. And then they had a nutritionist that would take their body composition every 2 weeks to make sure muscle was up and fat was down. And, it just so happened to be that he was kind of working with me and we were like, yo, this sounds pretty cool, like as a program to go through. So we put 10 people together, friends and family, and we launched the pilot. And the results were insane. We started putting it out on social media. And people started asking us, like, what is this? So we started a company. And to circle back what you had said, I was never the fitness guy. I was always the one struggling.
Right.
Paul was the face of the company. I was just one of the people who went through it. But that did come up a lot. Paul's like, you can't do this, you can't smoke, you're part of a fitness company. I'm like, I never said I was a fitness guy. I'm coming to you guys for the help, right?
Yeah, you're the before part. It follows the
Correct.
after.
Yes,
So
exactly. So that's an interesting thing that you bring up. But yeah, Paul is
Be
just
clear, desserts were allowed, smoking wasn't. So just want to
correct.
signal that one out.
yeah,
But so yeah, so that is the story. I didn't
that's interesting.
I would have loved to find a way to kind of keep it going long term, but it's really a complete lifestyle shift. So it is hard.
It's a lifestyle and it's a saturated space.
Yeah.
It's really saturated. I mean, every health and fitness coach on LinkedIn thinks I need some help because they send me messages every day. So I don't know what they're trying to tell me, but no, I think your point about the NFT space and real estate, it's really, really early. I talk to realtors every day and they think that, I've missed the boat on kind of the crypto Web3 space. And the reality is the boat, to use that metaphor, hasn't even came in yet. I mean,
Yeah.
the party hasn't started. We're just kind of setting up for it. So, I tell realtors and brokers every day, it's, we're still really in the learning phase. Some really, really smart people have capitalized and done really, really well. Like you said, your brother had done really, really well. But for traditional realtors, the space is kind of just being born. And so we spend a lot of our time kind of educating agents on, even the fundamentals of, what is kind of Web3 and how does it intersect with real estate.
How do you define Web3? Because
Yeah.
what we try to do on this podcast is take macro terminology, right? Like, and then break it down into layman's terms so that people can kind of wrap their heads around it. That's the way I learned as well. So just curious, how do you define Web3?
Yeah, I've actually written a whole chapter just about this topic. What is Web3? And it's a little bit like your mom's chili. Everybody's got a different kind of definition of it. To me, it's the evolution of today's web where the backbone is kind of built on and around blockchain. So technically, you got to think of Web3 as crypto, blockchain enabled web activities, the metaverse, things that have the ability to own or non-custodial data, be able to own copyrights or pieces and be able to go through different digital assets within that world. But for me, it's basically crypto, blockchain, metaverse, and the ability to kind of evolutionize, Web 2.5 where we're at now with kind of non-custodial data and sites.
So what was your background before this? Like what made you want to get involved in this space and real estate specifically?
Yeah, it's an interesting question. It's not as interesting as yours. This is my 25th year in real estate. So I've known real estate better than I have kind of emerging technology. I've always been on the prop tech side of it, whether it was media or business development or prop tech.
In what capacity of real estate? Like a broker owner, a realtor, or
No,
investor?
I've always been in core services. My first 19 years was just traditional real estate media.
Mhm.
So we managed and helped brokers in all 50 states for media. We have a media company at the time. And then I kind of hopped around. I got into about 4 years of business development, worked with Amazon, worked with Google and some companies on media and real estate. And that's where I kind of got into developing or emerging technology. And then for 2 years, I worked at the broker level for home warranty, selling into brokerages. So I've always had kind of brokerage relationships and understood the realtor aspect of it. But I've only been in the emerging technology blockchain space for a little over 3.5 years. I actually dabble a lot less on the cryptocurrency side. To me, it's a little bit of a speculative kind of piece that doesn't give me tremendous interest. The blockchain and the confluence of blockchain and real estate is really where I spend the most of my day.
What are the three? You said you speak to realtors often. What are the couple of the main questions that they have? Like, what are the most asked questions?
Yeah, realtors are funny. You'll have realtors like Jason who know more about Web3 than probably I do. Then you'll have some realtors that can't spell Web3. And the thing that I think people within the industry kind of give realtors a bad rap for is, realtors are really good at selling houses and they're really good at marketing themselves. And, that's kind of a full-time job on its own. And so then we kind of say, oh, they don't understand portions of technology. They're not great at evolving technology. No, they're really good at selling houses. And like that's what the homeowner needs them to do. They don't need to know, the difference of blockchains. They don't need to know the up and coming technologies unless it really impacts the homeowner. And so probably the biggest gap that we see for realtors is they don't understand the fundamental impact of how blockchain will impact real estate in a positive way. That's probably the biggest gap. Number two is the gray area around crypto seems to taint kind of the whole Web3 movement because crypto does have some elements of, volatility, snake oil salespeople that kind of work into that world. And they can't really differentiate the volatility, kind of the gray murkiness of crypto, and really the beauty and elegance of blockchain. There is a fundamental gap that people don't quite get that. And probably the third biggest gap is most realtors don't really have understanding on the nuance of NFTs. I don't think most Americans taking NFTs kind of away from pop art or digital art. They don't really understand what an NFT can do in real world transactions. And so those are probably the three biggest, most simple gaps.
Okay, so let's actually circle back to one. And what is your response to them when they ask, the first one was regarding, blockchain and maybe how it can be used. So what is your answer to them?
Well, if you really fundamentally, understand distributed ledger and just kind of the beauty of it, and if you really kind of break down custodialized data versus non-custodialized data, and if you look at the real estate transaction, at one point there are 14 different parties custodializing data, which is a fancy word for saying kind of hoarding the data or siloing the data. And if you look at a real estate transaction, it's probably one of the things that's really meant to be the most transparent. We want fair housing. We want the county and the city and the state to see what we're doing. We want the previous buyer or the next buyer or seller to be able to see these things in a transparent way. We've kind of almost by self-interest created this really Byzantine process. And so one of the things at Propy that in the blockchain that we really do is we try to make the transaction much more transparent, whether it's NFT a home, which is the most transparent way to sell a home, or just using blockchain to record deed and record offers. That way, down the road, every offer can be proven that it was presented. Because I think fair housing is a real issue. I think especially in the heyday when realtors were getting 30 or 40 offers in a weekend, to be able to present those and prove that they were presented in a transparent way, makes a lot of sense for a realtor ethically and also from, an E&O perspective.
Let's say recording a deed, it's on the blockchain now. It's also recorded with the county? Like, what kind of loopholes did you have to go through? How many people did you have to get on board to start doing that?
Too many. So it's currently it's a bifurcated process. We record on chain and we record at the local level. So we've recorded almost $5 billion worth of home value on chain here in the States.
Yeah, so that's incredible.
But it still is closed at the local level. And so, municipalities are kind of that choke point of the real estate transaction. It's really funny because you have all this data, the municipality custodializes it, then they re-release it back on public record. And so it's like you're going through these two inverted funnels for really no apparent reason. There will be a day in the near time future when we have a dedicated chain just for real estate transactions. And the local municipality will just log in on Monday morning at 9 o'clock because that's the hours they work. And they'll be able to pull the transactions over the weekend onto their custodialized data point. But we won't have to close based around the 9 to 5 of municipalities. And that's where I think once people understand blockchain and the ability for people to transact with whatever currency they want in real time, that's pretty interesting.
I find it fascinating. And, real estate, it's an outdated process, right?
Mm-hmm.
And this is, again, something that draws me to companies like yours and educating the people to really understand the full potential of what this transaction can look like. And it's a lot of work to get there. One of the things that you had mentioned is putting the home as an NFT. Can you just clarify what that means?
And this is where realtors probably get the most hung up because a traditional sale can be recorded on blockchain and generational ownership. It'll be on chain forever, and it just makes it's like a hand in glove. It makes perfect sense. The NFT process is a little bit more nuanced. You take a house, you basically think of just taking the deed or the ownership of that house and the fact that the house is owned free and clear, has no debt encumbrance. You NFT that part of it. And then when a seller wants to sell their home, They put the NFT up for sale, which is attached to the home. And state by state, it changes a little bit. And then they can, when you buy the NFT from a purchaser side, that home and the NFT, which owns the home, is transferred directly to the buyer. And with the way I explained it, sounds very easy. In reality, it involves, state by state taking that home, sometimes having to put it into an LLC or a corporation or a trust and be able to transfer that. But that's changing because as municipalities evolve with blockchain, we can close in real time on chain wallet to wallet. So that won't be necessary. But really the simplicity of the NFT is I take my house, we'll use my house as an example, and I think I want to sell it. And I know that I've got a new job and I need to be in the Northeast by December 1st. So I'm going to put my house for sale on November 30th. And so I go ahead and get my inspection. I go and get my appraisal. I get it cleaned up. And then when November 30th or December 1st comes up, and when I put that NFT up for sale, anybody who wants to buy that home on December 1st, they can transfer the funds. Let's say it's $500,000 from their wallet to my wallet. And the contracts are already written in a way that once the transfer of money happens, they now own the home. So December 1st, as I'm driving off to my new job in the Northeast, I'm funded. And so the beauty of the NFT process is real estate is really kind of has a lot of friction in it, especially the part once I list my house and then Jason starts working his magic, getting offers, and then we take an offer. And this is why real estate pisses me off at its fundamental level. Let's say I was to sell this house for $500,000 on December 1st. I burned gas, moved to the Northeast. 3 weeks later, after inspection, the buyer might say, I did offer you $500,000, but we found out that the boiler doesn't work and the carpet's not as good as we thought. We're going to make that offer $450,000. And then I could take it off market. I could negotiate with them. The real house sale starts at inspection. People just kind of don't understand that. And it reminds me of the Seinfeld episode where he goes, "You don't understand a reservation if there's no rental car here." Like,
Oh yeah.
the offer of 500,000 isn't really an offer of 500,000 if you now want to give me 450, because that original offer wasn't an offer. That was a starting point. And and if you look at like life in general, anything that has a tremendous amount of friction, whether it's taxi cabs, having to go get our own groceries, having to go to bars and restaurants and find, our significant other, we kind of use technology to end all that for us. We can hop on an app, find people. We can have an app deliver our groceries. Amazon has revolutionized the way we shop. Look at your local mall. But the home buying process, if you look at it, it's not that different than our grandparents' home buying process. And a lot of people don't like that. Okay, you offered me $500,000, but what am I really going to net after you kind of come and inspect the house? And so that's where the NFT process is really valuable, because when I listed my home, I gave you the inspection report. I gave you everything you need to see about the house. If you want to come through it, you can come through it. But when I listed on December 1st, my offer of $500,000, if you want to buy it, transfer money, I'm funded December 1st, and you can move in December 1st. That 45-day gap of when I list and take an offer to actual close, we will see that gap eliminated in the next, handful of years. We've already done it here at Propy. And it won't eliminate title and escrow. It won't eliminate the realtor value, but it will eliminate the buyer holding the seller for ransom. And especially as we go back to a normalized market where buyers are going to start to get a little bit more power again, sellers aren't going to put up with it.
Here's a question that I have for you. Have there been any lawsuits or anything? And the reason I'm bringing this up is Paul and I were sitting down and talking about, we've been involved in hard money transactions, right? Where somebody puts up collateral, and if they default, it becomes a nightmare, right? Like trying to get the house, etc. So because we're ambassadors on this platform called Niftify, where we actually do lend money against NFTs, and they have an escrow account where the NFT sits in. If the terms aren't met, it immediately comes into our wallet. So what I'm asking you is, has there been any cases where there's like a lawsuit where somebody would go, yes, I bought this, but I didn't know the inspection and this and that? Like, has there been anything where the court has to get involved to judge a transaction?
No.
Okay. Does that make sense what I'm asking?
Yeah.
Okay.
I mean, listen, not to say that it won't happen, but we've always closed the NFT through the wall-to-wall. We've also done all the traditional closing docs. But no, I don't think that's going to be an issue, especially if you disclose everything on the front end in a way that makes sense. And that's the key. People think the NFT process, we've had people reach out to us and want to NFT a home, it's because they're trying to hide something or kind of get something done quickly. The NFT process is just the opposite. It's
Yeah.
100% transparent.
Transparent.
Like
Yeah.
it's more transparent. You know, your traditional deal, think about a traditional deal. If I listed my home on November 30th, like we talked about, and Jason was my agent, I don't know how many offers I'm getting. I don't know if the offers are right or wrong. I don't know if my realtor and Jason would do this because I know him, but he might not be presenting me offers of last names he doesn't think are a good fit for the neighborhood. Like, and then we don't know why our offers aren't being taken. Like, it's a really kind of kludgy experience, for lack of a better term. And so with the NFT process, if I list it and you buy it, you transfer money over to me. Me as the seller, I don't get to pick and choose who buys the home. So we eliminate fair housing up front. You have all the contracts written into the agreement. So when you do transfer over, you agree to all the said stipulations. So you can't go back later and say, I didn't know about it. Well, obviously you did because you've transferred it through the smart contract. But that's not to say, I always tell this to realtors, blockchain doesn't eliminate lawsuits. It just
Yeah.
proves, it's just basically is your evidence in the lawsuit.
Got it. Thank you for that clarification. So Paul became a realtor recently. He's a trader. Okay, Paul, I'll let you give a little intro on you, but I know you may have some questions because you're in both worlds too. You have your real estate license, you are a homeowner, and you're one of our lead investors, right? Traders.
Yeah. I was a trader for 15 years before Mario and I started a fitness company. During COVID, when I was home, trading crypto and equities, I decided to get my real estate license because the housing market was going crazy and I just wanted to. And it's just another market that I've always wanted to be involved in that I haven't been in as much as the other two I just mentioned. So I did it for that. But my wife is a realtor also, and she's
Nice.
she's a full-time realtor. A couple of questions on the things that you just said. So first of all, backing us up to Propy, right? My wife, who works for Corcoran, knows about crypto just because of myself and Mario, and we're involved in it. So she's interested in it. Why would she want to enter her next transaction or begin even dabbling in real estate through Propy in crypto? Like, what is the advantage to her rather than just continuing on, going her merry way and doing what she's doing now?
If she was to say in her marketing, hey, listen, I can sell or find you any home using crypto funds. So if you have a tremendous amount of crypto wealth and you want to leverage that, either buying or selling, I can help you with that.
That right there, before you even go on, is a great enough answer, just so you know. Like, right? Like that will distinguish, like, so, and I'm gonna let you keep going, but what's the Compass, right? Is the new one, Mario, that's like has better technology and all that.
Mhm.
Just to come out and say that you're involved in crypto as a realtor and you can accept that, I think already puts you in a different class, but carry on.
No, I think you said it well. That's the part about being a realtor. People don't give realtors enough credit is the actual part of transacting on the house, finding the right house, negotiating for the right house, making sure people find the home of their dreams and, have a happy dream. That's part of the job. But the other half of the job is just finding people to use you. It's like you're a marketer and a realtor. And sometimes the best realtors are just really good marketers. They're not great realtors. And then I've met other people who I have one lady in particular who was the best realtor I ever used, but she wouldn't know she was even a realtor because she was terrible at marketing. Jason is a living example of a successful realtor who leverages kind of Web3 to find new clients. He would probably know that answer better than me.
It's interesting because right now I can say like a lot of people aren't quite ready to kind of jump into the crypto space. And I think we kind of have to go back and just kind of, what Adam was talking about, how the friction in the transaction, and like that is such an important point to understand, and how crypto and blockchain can solve that. So here's a basic sort of thesis in this is that we operate off chain right now in real estate, right? When you operate on chain, on the blockchain, on a protocol, it reduces all that friction that we're talking about. It makes things efficient. And I think that's the first step that I try to communicate to any clients who know that I can facilitate a transaction in crypto. I can facilitate a transaction in Propy. I can provide all these services that they might not even know about. That's the first thing that I really try to help them understand is that, okay, why would I do this? Okay, what is the worst thing about a transaction? Everybody tells me it takes way too long, all the miscommunication because you have 8 to 10 people involved in a transaction and you're going back and forth, who missed an email, who missed a deadline, that's an issue. What Adam was talking about is what we're all trying to solve here, and is to put everything on chain and have it all transparent. So now there's no confusion, or it's minimized, because now everybody is in essence on the same page and there's no he said or she said. So I think once people understand even just the concept, because people don't even know, if you were to talk to a layman and you say, oh, we're doing this transaction on chain, they're like, what is that? Right? So just understanding how we're living now off chain with all these different parties trying to communicate and facilitate a transaction, to now going on chain where it's much more streamlined and organized. That's the basis for now trying to get people more engaged in this process and want to do it.
Jason, from a marketing standpoint, I mean, there's a really good position here for someone like you to take, which is in a rising rate environment, right? The longer a transaction's going for right now, the more likely somebody may be to not qualify, right? Think about how many loan officers have to do a pre-approval all over again, right? Because the rate that their pre-approval was based on a month ago was at a rate of 5.5, and now it's at 6.5, and this changes the loan capacity. So I mean, when you start talking about speed and how this type of technology can help speed up the process, and here's why speed is important in a rising rate environment, I think are just some good topics for you to touch on your personal social media. Just wanted to throw it out there.
Yeah, absolutely. I plan on doing that. And one of the things that like Propy does so well, where I point this out to Adam when we first started talking, front loading the process in terms of having the inspection done, acquiring a whole title, and having it being all clear prior to even accepting an offer. I think that alone is revolutionary.
Would there be some friction though for that? Like, hey, I'm going to take an appraisal from a seller. Like, no, or are there fail-safes, or are there things in place where it wouldn't be as scary accepting an inspection from the seller?
I have that written down because, Adam, the process that you explained seemed great, except for that part for the buyer, right? Because that's different.
Every realtor brings that up, which is fair. Yeah. But in the NFT process, you could, if you thought you were going to bid on the house and it went for sale on December 1st, and you said, hey, can I send my inspector over? You can do that. By the way, inspectors can't be influenced. They're a little bit like your appraiser. They're pretty staunch. And I guess unless your inspector's the husband or your brother, or you could even say, hey, we're going to have 3 different independent inspections if you wanted to do it that way. And then a lot of times, I think the NFT process will look where I think the inspectors will be able to be sent in, because in the NFT process we have now, the seller's paying for that. And most sellers don't want to pay for an inspection. So maybe I see a way where the buyer can send theirs in, but it will modify. But it's funny though, to your point, Paul, every realtor says, oh, I would never let a seller pick the inspector. Yeah, but in 2021 and most of 2022, over 40% of houses were purchased without an inspection. And
which was insanity though, right?
Insanity.
That's kind of like it's a good thing that that's backing off, because I mean, I think that was unfortunate for a lot of buyers who weren't abusing it for the price, like you said, but to legit have an inspection, right?
I think so too. I mean, I think you're going to see a lot of realtors in about a year from today get a lot of calls from a lot of buyers and say, what the hell were you thinking when you let me, 1, way overpay, 2, not get an inspection? I think you're going to have a lot of people a year from now say, boy, that market was fun, but it was really, really unhealthy.
I think the suggestion you made of having even 2 or 3 inspections would solve the buyer being comfortable with it. Because Mara, you brought up liability, but like in the case, I don't know how it works right now, but if you get an inspection, your inspector clears the house, you buy the house, and 2 months later the boiler goes, you're not going back to the seller for anything. But in your case, I could see the buyer going back to the seller and say, hey, you gave me the inspection, nothing's wrong. I'm only 2 months here, the boiler's gone. This was your inspector, right? That can kind of be the difference.
Yeah, I could see that. And yeah, I mean, I know the inspection game pretty well. They would never pass or say something that wasn't true. If anything, they err on the side of everything looks bad after an inspection. But no, I could see a seller's point of saying, hey, I'm glad you got an inspection, but let me just get a guy that I think is, independent from the transaction. I think that makes sense. But that's a really good example, though, Paul, of all the moving parts on the NFT transaction. That's the one place where realtors get hung up on,
Yeah.
which means to me that it's probably a pretty good trade. It's a pretty good process if that's the only thing they can kind of get up in arms about. And so, I think most realtors, their first thing when they look at the NFT process and they take a step back is they say, well, if the transaction's really that smooth, am I going to be needed? And I'll give you a really good example of people who fight the technology. And this is a bit of a long story, so I'll make it quick. When I was a kid, I grew up in Indiana. I was a little kid, about 6 years old. I went to Kroger with my grandmother, and everybody was picketing the Kroger. And this is probably, I'm 45. This is probably like almost 40 years ago, maybe a little bit less, 35 years ago. And these people are picketing. I say, why are they picketing? It's because they're a union grocery store and they don't want automated checkouts. And I said, that makes sense. They think customer service is going to be bad. But the reality was those people picketing the automated checkouts just didn't want technology to replace them. And I think it's a very natural knee-jerk reaction. But as you see now, I was in a Target the other day, and there's more self-checkouts than there were checkout people. If technology is better for the consumer, it's always going to win. Like a good example is there was a lot of realtors in 2008 who refused to play ball with Zillow. There were brokerages that refused to give Zillow their homes. That lasted about 18 months. And then Zillow got every home in America, and we know what Zillow is now. Because at the end of the day, fundamentally, Zillow is better for the homeowner than the old system of going to different disparate websites, looking through MLS books. And if you look at technology from a real estate perspective and you say, okay, forget about Propy, forget about the company that's trying to sell me the technology. Does this technology fundamentally give the homeowner a better experience? Does it provide more transparency, ease of use, cost less, make it easier, make it more enjoyable? And if the answer is yes, then that technology will permeate into real estate. And so where you see realtors sometimes is they'll try to fight technology and self-interest, but I don't think technology will ever alleviate the realtor's value proposition. I just think it could modify how long that process takes. And so from a real estate perspective, if every deal that I work with a buyer now takes 65 days, if I can get that down to 25 days, does that now allow me to operate 3 times more volume? Does it free me up to have a better work-life balance? And so I think that's where really smart realtors look at it, and some that are maybe a little overly self-interested look at that and say, hey, does this somehow take away value that I bring to the table?
I think the answer is actually going to be both for the foreseeable 10 to 15 years, right? You walk into a CVS, there's self-checkout, and then you still got the teller standing there checking out the 80-year-old, right? Who doesn't want to deal with that. So here's how I think of it. There is no need for a real estate agent, right? And Jason, I'm a real estate agent. My wife's a real estate agent, so I mean no offense by that. But like the way finance gets you over that hump is they call people accredited investors. They're like, well, if you're accredited, you know what you're doing. Go do whatever the hell you want and screw it up. But there are some people who literally have no clue, who definitely need an agent and have to have their hand held through. But the easier you make it, the less that happens for a realtor to show their value, right? And that's what I mean by it. If you can get past all the frictionless points and besides the inspection, which you've already addressed, did you know a company called Purple Bricks that was doing their thing over in London and they tried to come over here? I think they were just a couple years early because they were pretty much trying to automate the whole process through their platform. So long as the real estate was listed and then purchased on their platform, they eliminated the need for a realtor and you just paid a fixed fee to sell your house. So I can list on Purple Bricks, and instead of me paying the 5%, Purple Bricks was, charging me 1%, and I was saving that 4% by using them through the whole thing. This was before kind of NFTs even took off, so I think they were kind of like onto something there. And my point is, for somebody like me, I would utilize that. I'm proficient with technology. Yeah. I know the markets. Jason, you're a realtor. If you were selling your own house, why not? Somebody who has no clue needs a person taking them through. Here's my last part of friction with the traditional route right now that I hope gets solved by you guys. Ready? Equities, for the most part, and finance is transparent. There's some parts of it are not. But if I want to buy a stock, I see the bid, I see the offer, I know what I'm getting, I transact, and that's all right in front of my face, right? Over the past 12 months, I was involved in some of these insane bidding wars with no inspections and this and the highest and best thing blew my mind. Because what you're telling me to do in that situation, and people are buying a house, which is probably the biggest investment a lot of people are making in their whole lives, right? So the house is listed at $500,000. They're agent comes back and they're like, you're one of 50,000 people who want this house. So we're going highest and best, and you need to decide in the next 24 hours, right? Then all these people submit their offer, and no one knows what anybody else's offers are, except for this one person where we are all being asked to trust, which is completely insane, which is like saying, I want to go buy Microsoft, okay? And I'm willing to spend $200 to do so, but let me just trust the market maker over here without showing me any sellers, and let me take his word for it that that's actually the price and he's going to sell it to me at that price, because he may tell me it's actually worth 300 and I have to pay that. Right? So does the transparency of everything you guys are saying kind of eliminate that madness? How are multiple offers handled on this new route?
Well, our platform allows, so if I'm the seller, I'm the homeowner, on our platform, I get to see all offers in real time. So when I call Jason, my realtor, we don't hear what the offers are. We discuss the value benefit of each offer. And then let's say a month after, let's say the deal goes horribly wrong, and then I go and I say, hey, I don't think Jason showed me all the offers. Jason says, no, Your Honor, my seller was on this platform. We can prove in a real time they received every offer. So, the first step is we at Propy, every seller on our platform gets all their own offers, so they get to see them. Where I think the friction will always lie in real estate, to your point, Paul, is the two parties. Well, so let's use my example. I'm selling my house. Let's say it's $500,000, and my neighbor, they want to buy it. It's never going to work without an intermediary. And to your point, Purple Bricks might be that intermediary. In car wrecks, it's our insurance companies that are intermediary, because you can't let two parties with something that much value. One party will always try to take advantage of that party. And so that's where the realtor proposition and the value is. And if you think about the realtor proposition, I get in trouble for this because people call me the most pro realtor guy in America, which I can live with that. I've been called worse. It used to be the realtor was, I know where all the houses are. You have to use them. You come into the house, we'll smoke cigarettes in the office. We'll get in my station wagon, and we'll go look at them together. Without me, you don't even know what's for sale. Then technology changed that, right? And so, yeah, but without me, you won't be able to make an offer. Well, we know that's changed. And so the value proposition is always going to be being the arbiter between the two parties. Now, does that always settle out at 6%? I hope so. I think so, maybe, but I don't know. Technology will have an impact on that. And so I think being that arbiter, making sure the deal goes smoothly and I don't get taken advantage of, from a buy side, makes tremendous sense. And so I think there's value there. Listen, I've been in this industry for it's my 25th year. Every year somebody was going to come in and try to diminish the value of the realtor. But there's only one person who can really do that, and that's the person listing or buying a home. And they're the only one who gets votes. But to your point, where I think it could get really interesting, Paul, and this is my own personal opinion, this is not an opinion of Propy. If you look at like the market in 2021, where FSBOs by percentage were at a very low number. And I think we'd all agree that if there was ever a market that you should try to sell your own house, it'd been 2021, right? Like, I think I could have sold my house by just put it on a handwritten 8x11 sheet of paper and staple it to my tree. I probably could have sold my house. But the problem is, people in 2021 had tremendous equity in their houses. Where you see people that will use technology to maybe not pay for the realtor that 6% is not because when it's easier or harder to sell, it's when they don't have the 6% in equity. And so you've got a group of home buyers right now, over 80% of people today's market that own their home have either bought in the last 3 years or refinanced in the last 3 years, which refinance most of it means they pulled a bunch of cash out. So right now you've got a lot of people who don't have a lot of equity in their houses. And you've got a market that's inverted where actually house equity may go down over the next year. Now, I think to your point, Paul, is really interesting. Do you see people say, I need to sell my house. We're having twins. I'm getting relocated, whatever the case might be. I don't have the equity to pay a realtor. Now is when I can use leverage technology to sell it myself. I think that is the interesting question. It's probably the thing I'm the most interested over the next 24 months is to see how people will try to compress GCI, not because of technology, but because they just don't have the equity in their home.
Yeah.
But what about the order book transparency? How come that can't exist in real estate? Taking the inspection out of it. How come I can't say I'm listing my house for $500,000 and I'm putting that up on Zillow? And if somebody's willing to pay that, I'm contractually obligated. It's going to be sold. But at the same time, I can go onto Zillow and I can see the house and I can see somebody has bid 490 for
Yeah.
like why is that process put in the trust of the one person who is the seller's agent, right?
Yeah, I don't know the answer to that. There's probably a lawyer who could probably answer that. But I think your point is spot on. I mean, that's one of the reasons I love traditional NFTs. I can go see what the floor price is. I can see who bought it for what. I can see it in real time. I mean, that's why the NFT marketplace is so fun, because you're speculating with a lot more data. You can see exactly what everything is going for in real time. Whereas houses, you're going to have a realtor come by your house and drop off 30 sheets of paper and give you the comps. And you're like, oh, this is more confusing than it was traditionally. So I think we'll get there too relatively soon, especially when you can buy and sell houses wall to wall. I mean, think about it even from an investment perspective. Let's say I own 500 homes. I need to sell 50 pretty quickly because I need to use my liquid assets for something else, which is a real thing. Real people, real investment companies do this in real time. If I had those as NFT assets and I want to go to another investor and say, hey, do you want to take 50 of these off my hands, just wall to wall? We could transfer 50 home ownerships between two parties in minutes. Whereas now that would take tens, if not hundreds of thousands of dollars in lawyer fees and BS fees. So think about it, not even from a traditional person who buys and sells every 6 or 7 years, which that 45-day kind of Byzantine process is manageable because we only do it 6, 7 years. Imagine if you hold 500 homes at a time or 1,000 homes at a time, or if you want to put all those homes as an NFT and borrow against them on the DeFi market. Like, you have people that use real estate in real time, no different than you use houses in Monopoly. Like, you have to collateralize those and use those as against assets. And I think that's what we'll see the quickest moves with NFTs and kind of that emerging technology in real estate. If I only sell my house every 7 years and Jason's my realtor and I love Jason and the process takes 60 days, I can probably sludge through it. But if I'm in this business every day transferring homes that I own and I'm a big investor, this technology is a game changer.
Yeah.
An
And to
amazing
Paul's
point.
point, Jason, you could back me up here, but highest and best is also a strategy. I have, as a listing agent, have a fiduciary responsibility to the seller. I don't know the buyer anything. So if my marketing tactic is, and I go, look, guys, I think if we go to highest and best, we're going to get another 25,000 out of these people because they don't know what anybody's offering and I don't have to disclose it. So,
which is the inefficiency that should be eliminated with a trustless system.
but why,
Yeah, I mean,
but why is
well, I
that
mean,
inefficient?
because you have characters. What if you see someone's last name that maybe they'll say you're selling your neighbor's house and you see the last name is a name that you associate with the religion that you don't like.
Oh,
Why
you're
is
saying
it-
not accepting the highest and best and
Oh
choosing
yeah,
another one.
I was
Yeah.
going to go
Okay.
into that too.
All right, that's
Yeah,
not what
you-
I'm
You
sorry.
called it a strategy also. A strategy
Yes,
based
but
on an
not
inefficiency.
thinking that they weren't taking the highest and best, regardless of
Yeah, or what if you have 3 offers all the same
yeah.
and one of them was a family that you thought wasn't going to be great for the neighborhood? Which, by the way, guys, this happens in real time. It
Yeah.
happens every day. If
I can
we're
understand
all
that. Yeah.
burying our heads in if we don't think. But to Paul's point, if everything's transparent and open, and let's say I didn't get the offer, and they see to your point that it was $20,000 higher, I'd say tip my cap. They got it because they offered more. But now I don't even know why an offer wasn't accepted.
That's right.
Yeah,
It's
got
just
it.
like,
Yeah.
Okay.
well,
Understood.
why? And then that's where it creates a tremendous amount of anxiety about, our realtors, which I think they are for the most part, are they taking the best offers? And to your point, the fiduciary responsibility is absolutely true. But sometimes highest and best means I want to get my liquid out. I want a cash offer because I got to move, soon, or I don't want a contingency.
Yeah.
And so highest and best is sometimes a bit gray, but if you had a platform where it's transparent like we do at Propy, it eliminates all that.
One last question for me. Are your marketing efforts geared towards, are you going directly to get more buyers on or sellers directly to your platform, or is it the realtor?
It's mostly geared towards real estate, realtors.
Got it. You want
Um,
realtors to adapt it.
Yeah, we do a good job of doing everything first within the technology, but then sometimes it kind of muddles the message a bit. But our main generator of revenue is we own title and escrow in 5 to 7 states, traditional deals, but we also handle crypto deals and we close everything on chain. But that's our biggest hurdle is people think of us as just Web3, just emerging technology, but we also own traditional real estate title companies in 5 states, none of which are by you guys, by the way.
Got it.
Or I'd be calling you.
Well, just to throw it out there, if you do need to come get in front of more realtors and webinars and things like that, I'm happy to help and
I appreciate that.
promote it across my resources and whatnot and my network.
Thank you.
Hey, Adam, somebody put in our partner team channel a house that was an NFT by Roofstock.
Yeah.
You know those guys?
I think I
Yes,
just
I
did
just saw
it.
that too.
Did it just happen?
Yeah,
Yeah.
It was like $175,000 house. Is that the one?
that exactly the one, and it was listed on OpenSea, and it showed like the attribute.
Yeah. It was the first house ever NFT, they said, which clearly they haven't been paying attention. I saw the only thing that surprised me about that was you could still buy a house that looked that nice for $175,000. That was the only part of that.
That's what Mario's brother said.
I said, where the hell is that? I think it was South Carolina, right? Which actually South Carolina is quite nice. There are several companies out there that have kind of been playing around with it. We obviously the first and we do it the most. We've done 5 publicly and we've done several privately. But I mean, NFTs and real estate are actually a really good fit. And so, I tell my team all the time, we didn't invent blockchain. We didn't invent NFTs. Like there are going to be people out there that do that. But hey, listen, I think the more people do it, the better. Because I think our biggest challenge sometimes at Propy is explaining to everybody the process. Once everybody kind of gets and feels it, then they'll use the platform more often.
And I think calling it an NFT is tainted because people are just associating NFT with images right now. And I saw Starbucks rolled out a program and they didn't call it an NFT. They called it a journey stamp. And I think that's really smart because the second somebody says NFT now, you're like JPEG. That's what happened.
Right. Click and save.
Yeah, this is what they're thinking. So I think when you're talking about such a big investment, like a house and things like that, I think maybe changing the term from NFT to something else may help.
Even the term NFT is a pretty stupid term if you think about it.
For sure.
It's confusing. I was gonna say, like in real estate, a home is an asset. In NFT, it's an asset as well. And we have the term, it's a digital asset, it's thrown around. But NFTs is something that everybody it's easy to remember because it's an acronym, but understanding it as an asset, how many people actually correlate that to it being an asset, which it actually is.
Yeah.
Hey, here's my last question for you, Adam. The on your website it says get crypto certified. That's for real estate agents, right? That seems pretty cool. Is that like I'm crypto certified in my county and I'm the only one, or is it just something for me to use and market and everybody can go ahead and do that?
Well, we thought realtors needed more acronyms after their name. We thought, it's TCA. We thought that would be good. So it's crypto certification. It basically allows the agent to know enough about crypto Web3 to be able to talk to like-minded buyers or sellers. And then, really good realtors like Jason, they'll use their ability to kind of transact in crypto in their marketing efforts. They may only use it in 1 or 2 deals a year in terms of people who think they may or may not want to use crypto. An interesting stat that came out last year that I was even surprised by is 12% of new home buyers used crypto in the real estate transaction. And so if you think about that, it's pretty interesting. 12% of new home buyers use crypto. And what I think a lot of people think it's like, oh, they must have just bought it with it. No, not necessarily. If I've got a couple $100,000 of Bitcoin, and I want to borrow against that to put down on a traditional, mortgage, I think that makes a lot of sense, especially since the market right now is a little soft and I don't want to sell Bitcoin. And especially when money was cheap on the traditional side, it made a tremendous amount of sense. Why would you sell Bitcoin when they're giving mortgages at 3% or less? And they're always surprised by how many traditional people that have had crypto background. Hey, my son-in-law turned me on to it, or my neighbor was mining for it and I bought a bunch. Like we all think it's this kind of tech wizard hiding out in his mom's basement, but a lot more people are crypto fluent than we give them credit for.
Cool. Are you CCA, Jason?
So, I mean, I didn't take the course, but like Adam kind of told me, he was like, honestly, for you, it'd be wasting your time because you could teach the course. So like, yeah, like I know what I'm doing. Obviously, I know how to talk about it. But I mean, I would advise anybody who's interested in just even knowing exactly how Adam said, just how to talk to people about it if they're interested and just how to provide that service. I think it's a great gateway just to kind of have a baseline knowledge.
This was a ton of fun. Thank you guys for coming on. It's a great conversation.
Yeah.
Thanks for having me.
Thank you so much.
I enjoyed myself.
Yeah, Jason, appreciate the intro. Adam, great to meet you. I hope we stay in communication, and we'll let you know when the podcast is out and ready and edited.
And sounds good. Guys, let me know if I can help in any way.
Excellent. Thanks so much, guys.
You guys
Have a
have
great
guys.
day.
Thanks.
Thank you.
Bye-bye.
Take care.